What your stockbrokers don't want you to know? Thing one, nobody can predict the future. There's no such thing as a sure thing when you invest. But number two, you have the access to all the information you need to evaluate a stock's performance. So don't let them scare you away with technical jargon, actually some pretty basic concepts underlying a stock's performance in the market. And I'm going to help you break it down. I'm Danny Ray, the Mindful CPA. I've been in the industry for over a decade, and I'm on a positive money mindset mission. Repost, save, and follow this video so I can keep sharing knowledge every day to help you grow your net worth. Today, we're diving into the basics of understanding financial statements. This is essential for evaluating stock performance. There's many things to look for when you're looking at a company's financial statements. By the end of this video, I'm going to give you at least 3 key things to look for to understand the underlying company's performance. So let's get started. First up, we have the income statement, also known as the profit and loss statement. This shows the company's revenues and expenses over a specific period of time. Key components to look at are revenue, that's total income from sales. Gross profit, that's revenue minus the cost of goods sold. Operating expenses, now those are the costs required to run your business, excluding the cost of goods sold. And then net income, that's the final profit after all the expenses. It's also called the bottom line. When evaluating, focus on consistent revenue growth and profitability trends over time. Next, we have the balance sheet. This gives us a snapshot of the company's financial position at a specific point in time. And it includes assets. These are things like cash, inventory, property, anything the company owns. And liabilities is second. That's what the company owes, like debt or accounts payable to its vendors. And finally, we have equity. It's the value left over for shareholders after the liabilities are subtracted from the assets. Always compare assets against the liabilities of a company. Strong balance sheet typically has more assets than liabilities. That indicates financial stability. Finally, we have the statement of cash flows, my favorite. This tracks the flow of cash in and out of the company. It's divided into 3 sections. We have operating activities, that's cash from your core business operations. Investing activities, which is cash used in or generated from investments, just like it sounds. And then we have financing activities, cash from borrowing or repaying your debts, and cash generated from issuing shares. Now, positive cash flow from operating activities is crucial. It means that the company generates enough cash to sustain its operations just from its core business. Understanding these financial statements is key to making an informed investment decision. Stay tuned for more tips on evaluating stock performance. Like, comment, and follow for more financial insights.